Dear students, welcome to next lecture of Econ 242, that is Agricultural Finance and Cooperation. In last lecture, we have discussed about the different repayment plans of loan. So, in today's lecture, we will discuss about the recent trends in agricultural finance, then what is social control and nationalization of banks, or what is the need of nationalization of banks. So first is about the recent trends in agricultural finance. As we know, finance in agriculture is as important, or it is important as development of technologies. Means financial support is very important for the agricultural development. Then technical inputs can be purchased and used by farmer only if he has the funds. Means the technical inputs or the new technologies can be adopted by the farmer only he has a fund, or only he has a financial support, but his own money is always inadequate, means insufficient, and he needs the outside financial supports. As we know, farmers are facing so many financial problems, so his own money is always inadequate or insufficient or low, so he cannot purchase the technical inputs, or he cannot adopt the new technologies because of insufficient money. So that such farmers need the financial support from the outside. So professional money lenders were the only source of credit to agriculture till 1935. Means before the government's intervention or government cooperation, the only source of money to farmer is the professional or private money lenders. They used to charge exorbitantly or high rates of interest and follow unethical practices, okay, while giving loan and recovering them. Means the private money lending agencies or private money lenders, they used to they used to lend money at high interest rate, or they are following the unethical practices, or they are doing the malpractices and they are earning money, okay. So as a result, farmers were heavily burdened with the debts. Many of them are living in perpetuated debts, okay. There was widespread discontentment among farmers against these practices, and there were instances of riots also. Means because of the extortion by the money lender, farmers used to do the suicides also in very sensitive cases. With the passing of Reserve Bank of India Act in 1934, District Central Cooperative Banks Act, Land Development Bank Act, agriculture credit received inputs, and there were improvement in the agricultural credit. Means because of such acts, because of after passing the Reserve Bank of India Act 1934, District Central Cooperative Banks Act, Land Development Banks Act, agricultural credit receives the more improvement, or it is helpful to the farmers. A powerful alternative agency came into being. Means because of such acts, the powerful alternative agencies or alternative agencies to professional money lenders are come into being. Large scale credit become available with the reasonable rates of interest in easy terms, both in terms of granting loans and recovery of them. Means because of government intervention, the large scale credit become available to farmer at a reasonable interest rate. Both the cooperative banks advance credit mostly to agriculture. The Reserve Bank of India, as the central bank of the country, took a lead in making credit available to agriculture sector through this bank by laying down the suitable policies. As we know, Reserve Bank of India is the leading bank, or is the central bank of Indian finance. So RBI took a lead in making credit available to agriculture sector through the banks by laying down the suitable policies. Okay. Now, although the cooperative banks on the other hand, the cooperative banks started financing agriculture with the establishment in 1930s. Real inputs was received only after the independence, when suitable legislation were passed and policies formulated. Means cooperative sector banks also came into existence, or they are also helping the farmers. Thereafter, bank credit to agriculture made phenomenal progress. Means after the invention or after the involvement of cooperative banks, the bank credit to agriculture made the phenomenal progress till 14 commercial banks were nationalized in 1969. The cooperative bank were the main institutional agencies providing the finance to agriculture. Means before the nationalization of 14 commercial banks into government banks, okay, or before the conversion of the 14 major commercial banks into the government banks, means before 1969, the main finance source or main source of financial support is of cooperative banks. Okay. After the nationalization of the bank, it was made mandatory for this bank to provide financial support or finance to agriculture as a priority sector. So these banks undertook special programs of branch expansion and created a network of banking services throughout the country, starting financing agriculture on large scale. Means after the nationalization of bank, the bank started the expansion of their branches, and they created the network all over the India, and they have started financing, or they have started the helping financial support to the farmers on a large scale. So thus agriculture credit acquired multi-agency dimension. Means because of nationalization of bank, agricultural credit acquired the multi-agency dimension. Means agricultural credit or farmers, they got the options for getting the financial support. Okay. Development and adoption of new technologies and availability of finance go hand in hand. Now agriculture credit through multi-agency approach has come to stay. Okay. The procedures and amounts of loan for various purposes have been standardized. Among the various purposes, crop loans, means short term loans, has the major share. Means after the nationalization, means after the 1969, the various purposes of crop loan or short term loans has the major share in the agricultural finance. Okay. So in addition, farmers get loans for purchase of electric motors with pump set, tractor, other machinery for digging wells, installation of pipeline, installation of drip irrigation system, planting fruit orchards, purchase of dairy animals, poultry, sheep, goat keeping, and many other allied enterprises. So these are the purposes, or these are the reasons to take the loan from the financial institutions. So this is about the recent trends in agricultural finance. Now, what is social control and nationalization of banks? Okay. So we have seen the progress of agricultural finance in India. Now, what is social control? At the time of independence, the private sector banks were predominantly urban oriented, and the control of few industrialists, which had not helped in achieving the basic socio-economic objective. Means at the time of independence, the only private sector banks are in exist. Only private sector banks were predominantly urban sector oriented or urban area oriented. Means they are ignoring the rural area, or they were ignoring the agriculture sector, or these private sector banks are under the control of few industrialists. Okay, so the credit needs of agriculture, small scale industries, also weaker section such as small traders and artisans continued to be ignored. Means because of private sector banks or because of dominance of private sector banks or dominance of few industrialists, agriculture sector, small scale industry sector are ignored by the financing agencies. Even though for nearly 3/4 of population is engaged in agriculture, 3/4 of India's population is engaged in agriculture sector, or agriculture is the main occupation, contributed to 50% of gross domestic product. The total bank credit advance to this sector is only 1% as of June 1967. Okay, so the bulk of deposits contributed to the public were being advanced to the industrial sector, means large amount of loan in the 1967, large amount of loan are deposited or loan amount is advanced to only to industrial sector and trade sector, ignoring the prime sector of agriculture. Means large amount of loan is given to the industry sector, they were ignoring the agriculture sector. Only 1% loan they were given to or they were advancing to the agriculture sector. Even the contribution of agriculture in 1967 is 50% in the total GDP. Then also they were ignoring the agriculture sector. In agriculture, the credit sense was dominated by the private money lenders who were charging the exorbitant rates or high rate of interest, or they are doing the malpractices. Okay, all this situation compelled the imposition of social control over the banks in 1968. Means because of predominancy or because of dominancy of private sector or urban oriented bank or dominancy of few industrialists or ignoring the agriculture sector, such a situation leads to social control over the banks in 1968. The main aim of social control was achieving of wider spread. What is the main aim of social control? The main aim of social control was achieving of wider spread of banks or expansion of bank credit to the priority sector, thereby reducing the authority of managing directors in advancing the loans. Means expansion of bank sector to priority sectors or expansion of bank credit, to the priority sector was the main aim of social control. Social control created the tempo of banks expansion as evident by the addition of 785 new branches by the end of first half of 1969. By the end of first half of 1969, means up to June 1969, there were expansion of 785 new branches. Okay, but this did not take a dent in increase channelization of credit to agriculture sector to weaker section. Means that much not enough to channelization of agriculture credit and to reach up to the weaker section. So the directions, according to the directions issued by the government, were also ignored by any of the banks. Means some direction were ignored by some banks because they were predominantly or their control few industries or few industrialists, they were controlling the banking sector, or urban area were controlling the banking sector. So under these circumstances, the government thought that the social control of bank was not sufficient for socio-economic development, and nationalization of bank was considered as the alternative solution. Means after this social control also not sufficient to give proper supply, to give the financial support to agriculture and weaker section of India. So under such circumstances, government thought that the social control of bank was not sufficient for overall socio-economic development and nationalization of bank was considered as alternative solution. Means for social control, if by social control it is not possible to reach all the agriculture sector or to reach towards the weaker section, then they have added another solution, another alternative solution as a nationalization of bank. So the government of India on 19 July 1969, 19th July 1969 promulgated, or they have advanced their ordinance called the Banking Companies Ordinance in 1969, acquisition and transfer of undertakings. Under this act they have passed the ordinance called the Banking Companies Ordinance 1969. Under this act 14 commercial banks having deposit more than 50 crore each were nationalized, and they were, means these are the 14 commercial banks. Means on 19 July 1969 the first spell of nationalization of bank was happened on 19 July 1969. In the first spell of nationalization of bank, 14 commercial banks were nationalized, which having deposit range up to the 50 crores. 50 crores. So these are the 14 nationalized banks in 1969, 19 July 1969. First, Central Bank of India, Punjab National Bank, Bank of Baroda, United Commercial Bank, Canara Bank, United Bank of India, Dena Bank, Union Bank of India, Allahabad Bank, Syndicate Bank, Indian Bank, Bank of Maharashtra, and Indian Overseas Bank. These banks were nationalized in the first spell of nationalization on 19 July 1969. Okay. Now the objectives of nationalization of bank. So as we know, the nationalization of bank was done by the former Prime Minister Smith Indira Gandhi, late Smith Indira Gandhi. They have done the nationalization of first spell of nationalization of bank. So the objectives behind or purposes behind the nationalization of bank are: first, removal of control on banking businesses by a few industrialists. Means removal of control of few industrialists on the banking sector. Second, elimination of the use of bank credit for speculative and unproductive purposes. Elimination of use of bank credit for speculative and unproductive purposes. Then third objective, expansion of credit to priority areas. Means in social control or before the social control, there were agriculture and weaker section was ignored. So the objective of nationalization is expansion of credit to priority areas which were grossly neglected, like agriculture and small scale industries. Then fourth objective, giving a professional bent to the bank management. Means giving a professional professional system to bank management. Encouragement of new entrepreneurs by providing the financial support. Provision of adequate training to bank staff. So these are the 6 objectives of nationalization of bank, which was done by the former Prime Minister late Smith Indira Gandhi. Okay. So the average population served per bank declined markedly from 65,000 in June 1969 to 32,000 by June 1975. Means the effect of nationalization. Before the nationalization, per branch, the average population served by per branch was up to 65,000. Means for after 65,000 of people there will be one branch of bank, but it goes on decline up to 1975. It comes to 32,000. Means after the 32,000 of people there will be one bank branch in 1975. So encouraged by the success of first spell of nationalization, means after the success of first spell of nationalization, government got the encouragement, then a bank, then 6 more banks in the private sector having deposit more than 200 crores were nationalized on the 15th April 1980. Means after the success of first spell of nationalization, in first spell they have nationalized the 14 banks which are having the deposit up to 50 crores. So after the successful of first spell, then they have nationalized more 6 banks in 1980 which are having the deposit more than 20 crores. So second spell of nationalization of bank was happened on 15th April 1980, and in the second spell there were 6 banks nationalized were Punjab and Sindh Bank, Andhra Bank, New Bank of India, Vijaya Bank, Oriented Bank of Commerce, Corporation Bank. So these 6 banks were nationalized in 1980 on 15th April as a second spell of nationalization. So as a result of 2 spells of nationalization of bank, by the end of June 1992, the bank advances towards the agriculture sector were 16% of total credit as against the 1% at the end of 1967. So this is the impact of nationalization of banks in 2 spells. So this is about social control and nationalization of bank. So for this course you can refer the book Agriculture Finance and Management by Subba Reddy and P. Raghu, and another book is Agricultural Economics by Subba Reddy. Thank you.